Evaluating long-term care insurance. Man, I've been sitting on this article since February 24th, 2020. My man Alan Roth had written it. It's just a fantastic article. I just have never got around to doing this video, and I want to do it now because I think it's critical. It's critical to understand long-term care insurance, and maybe alleviate some of the fears that you have with it for sure. All right, so let's dive into this. Again, dateline February 24th, 2020. Alan Roth, you're probably familiar with him. Surprised there's only 32 comments, but let's dive into this. Whether to purchase LTC, long-term care insurance, is one of the most difficult and consequential decisions a retiree will make. Because of the complexity of the products and the uncertainty of needing care, very few have attempted to provide an objective analysis, as I did below, I being Alan. I've written less analytically about long-term care insurance and hybrid solutions for AARP, a demographic where the subject is of the utmost importance. As evidence of the contentious nature of this topic, I have no shortage of emails telling me how stupid I am. Let me just make a point. Alan says it's one of the most consequential decisions a retiree will make. I don't think it's that consequential because if you're already retired or you're in your 60s, it's going to be awful hard to get a good policy that is not insanely expensive. It's going to be, I'm just telling you right now. You always want insurance when you least need it. Like I have long-term care now. I got it going on 10 years ago now. It's crazy. And because that's the least amount of cost, because my wife and I would need the least amount back then. As we get older, it becomes more and more expensive. At some point, it'll be prohibitively expensive. I'm just going to drop it like a hot stove. Do you drop it like a hot stove, hot potato? Anyway, so what's happening here is I think that's the ship has already sailed if you're looking at it as a retiree, whether or not you need long-term care insurance, because you should have been looking at that in your 50s at the latest, in my opinion. But let's keep going. But I get what he's saying. It's like, look, man, a lot of people who are retired or about ready or not, if not retired, are like going to start concerning themselves with long-term care. Again, I think you got to get in front of that before that. We must understand the probability of needing care, and if so, for how long and at what cost. This is the distribution curve rather than the discrete binary yes or no. If you end up needing long-term care for 100 days or less, you may pay very little. Medicare could cover most of the costs if you're admitted to a Medicare-certified nursing facility within 30 days of a hospital stay of 3 days or longer. If you stay 10 years, however, the cost can be staggering. All insurance companies, even mutual companies owned by the insured, need to cover their costs and make a profit. Thus, the odds are that buying long-term care insurance will be the wrong decision in the sense that the expected benefits, net of cost, will be less than zero. But that's the same as any insurance policy. An example is a high-income earner needing term life insurance, which is likely to expire worthless because the consequences of dying early and leaving the family exposed are just too high. So me, I'm a high-income worker. I have the term life insurance. I probably will not die while my term is in force, and as such, I will have wasted money. And the same thing with most insurance. You have home insurance, you have auto insurance, you have insurance. The vast majority don't use. Is that a waste? No, of course not. All right. Here are some high-level estimates of probabilities of needing nursing home care, according to the RAND Corporation. Approximately 56% of Americans will need at least 1 day of long-term care, but only 32% will pay anything out of pocket. All right. Approximately 56% of Americans will need at least 1 day of long-term care, but only 32% will pay anything out of pocket. I want to say that twice because there's a little bit confusing there. I'll get into it in a second. The study notes that the 56 needing long-term care is substantially higher than previous estimates. All right, so 56% of Americans will need long-term care, but only 32% will pay anything out of pocket. Is that 32% of the 56% who need it? I don't know. Is that 32% of the whole American population? That 32% of the people will pay something out of pocket? I don't know. So that's confusing. 56% of Americans will need it, but only 32% will pay anything out of pocket. Among women, 64% will have some nursing home stays versus 50.6% for men. Again, so we go back to here. Okay, we'll keep going. Women average 301 days. Men average 141 days. All right, so hearing that, so women average less than a year, and about half the women, about 2/3 of the women have some kind of care, and they'll average less than a full year. I hope you're seeing. I hope you're seeing where I'm going with this. So 2/3 of women roughly will need some nursing home care. The average is less than a year. Men, half of the men will need some kind of long-term care. And the average is less than half a year. But check this out. The probability distribution of the combined genders looks like this. In the 75th percentile, 75% or less are in the nursing home for 240 days. That's it, less than a year. 90th percentile are in the nursing home for less than 3 years. All right, that means 10% of the population or more are in the nursing home for for more than 2.5 years. 95th percentile are in, I don't know, what's 1495 divided by 365, that's 4 years. So basically, only 5% of the population is in there for 4 years. All right, I hope that makes sense. So that means 95% of the population is in there for less than 4 years. 90% of the population is in there for less than 3 years. A 2015 government study provided by Lincoln Financial had slightly higher projections, but very similar numbers for the wealthiest quintile. These estimates are of needing any paid long-term care services and support, which includes less intensive, less expensive care. All right, I just want to revisit this. 90% of the population is in a nursing home for less than 3 years. I'm going to go down here. All right, right here, the average cost right there, $279,000. According to Lincoln Financial Group, the national average annual cost of nursing home is $102,000 a year. That's a policy with a 90-day waiting period, essentially what Medicare covers for the most part. Hold on just a second. So 90% of the population doesn't have 3 years in nursing home. All right, the cost for that 10% of the population who does have that, less than 2 years, about 2.5 years, is 2.741 years to be exact, is $279,000. So again, 90% of the population will have spent less than $279,000. Why do I bring it like that? Because the median home in the U.S. is about $275,000. Interesting, huh? So if you're in a nursing home for 2 years, for 2.74 years, where are you not? You are inherently not in your home. And as such, you sell the home to go to the nursing home. I hope that makes sense, man, because that is an expense. It's not cheap. I get it. Not likely for that to happen to you. If you do, you have this thing called your house that you sell to go in there. It's just that simple. There's a 5% probability of collecting $392,000 or more in benefits. This is the benefit for long-term care. The industry is quick to point to high costs, but I've never seen it mentioned that there are also savings, especially if one is single. Most women, they're going to take care of the husbands. The husbands die. And then by the way, this is joint combined genders too. So you take out the men and just put the women. It's going to be longer for sure. But again, it just goes to show you that at the end of the day, the men's gone. You're not both occupying a nursing home at the same time. Not very likely at all. All right. Often one spouse becomes the caregiver as a woman, but need care of themselves after the first spouse has died. If that's the case, they save quite a bit in expenditures because don't forget, they no longer need a house, car, insurance, traveling, eating out. All that's encompassed in this amount of money they're paying for long-term care. The cost of long-term care, traditional versus hybrid. All right, in evaluating the decision to buy long-term care, I'm going to compare the cost to a bad case scenario of a 1495-day nursing home. So the top 5%, 95% of the population this won't be applicable to, but 5% it could be. All right, the two types of insurance are the traditional long-term care and the hybrid policies that sit on top of a life insurance policy. I'm going to use the odds above, but those likely overstate the probabilities of needing care because both types of long-term care insurance have underwriting that tries to weed out those more likely to benefit. To make it personal, I'm evaluating policies for my wife and me with a $102,000 annual benefit because that's what the average cost of nursing home is. Pablo! To evaluate traditional long-term care, I turned to Jesse Sloan, Executive Director of the American Association for Long-Term Care Insurance. He quoted a policy with a combined annual premium of $7,500 for a $102,000 benefit and a 3% annual inflation escalator. My wife's policy is far more expensive, as Sloan said, is roughly 2/3 of claims come from women. Good boy. It has a 90-day elimination period and a 5-year maximum benefit for each of us. If rates don't increase over 20 years, we pay $151,000 in premiums. Discount that 3% annual rate of the benefit, that amounts to $116,000. I made the problematic assumption that insurance rates don't increase, given the huge increases of 50 to 100% more some have experienced in similar policies. Sloan blamed those rate increases on lower than expected lapse rates, lower interest rates, and higher claims experiences than the actuaries assumed. He was confident there'll be few, if any, rate increases in the future. Yeah, of course. Okay, I trust you. I'm not so confident. Competition is lessening, and as I wrote in 2002, that long-term care insurance could become even more extinct and thus more expensive. That Sloan guy, crazy man. Sloan confirmed there are now fewer than a dozen long-term care insurance companies from a height of more than 80, as most have exited the business because they don't know the risk. Using the probabilities previously noted from the RAND study, there's a 5% probability that each of us will have a stay of 1,495 days and collect $392,000 or more in today's dollars. That translates to a 90% probability that neither of us will have such an occurrence and 0.25% probability that both of us would. Should both of us spend 5 years or longer in a nursing home, we collect $1 million in benefits. Yet the probability of that happening is far less than 0.25%. And is starting to approach lottery odds. A fairly bad case scenario is one of us that spends 1,495 days and collects a net benefit of beyond the premiums. And again, this is without any premium increases. Because there'd be substantial cost savings from not traveling, eating out, shopping, not needing a car, potentially even a house, we decide we can self-insure versus this option, as I expect many of our clients would as well. And I think this is one of the things that these fidelity studies about scaring you to death about health insurance, long-term care, and all this. Yes, that is not cheap, but your living isn't cheap either. It still is going to cost you $5,000 a month just to live. So if it's $10,000 to live in a nursing home, it's $5,000 just to live, to pay your bills, to feed yourself, to clothe yourself, to entertain yourself, to get your haircuts, to brush your chops, all that stuff. And now you still got the $5,000 for the cost of the house that you're renting, the room that you're renting, plus a professional care, the skilled care, assisted living, whatever it is. So in of itself, it's not like it's $102,000 on top of the $5,000 a month they're already paying. It's not, because that's gone. Hybrid policies are gaining in popularity. These policies have several benefits, such as being able to pay up front and not having to worry about future rate hikes. They have death benefits and allow some ability to surrender and get some of your money back, if not all of it. Because of these additional benefits, comparing hybrids to a traditional is similar to comparing term to permanent life insurance. You can think of some hybrids as creating a pot of money that can be used for long-term care as a death benefit and even getting some of the money back while living for non-long-term care needs. I use Lincoln MoneyGuard 3. I used to sell this back, it's 15 years ago. I was a fan of it then, and I'm still a fan of it, in the right case. Has a slightly lower $100,000 benefit, 3% compounded inflation increases, and a 7-year benefit duration. This policy has no elimination period. Though the upfront cost was nearly 4 times the present value of the long-term care insurance at $405,000, the maximum we could collect was a higher at $1.4 million in today's dollars. So basically, you're paying $400,000 into that. Whew. We could have a net benefit of about $1 million in the incredibly unlikely event that we both spend at least 7 years needing care and using the maximum daily benefit. But it's unfair to compare the cost to traditional. The policy has a 70% return of premium, meaning that anytime we could surrender the policy and only beat out about 30%. In addition, there are death benefits totaling to $435,000. So essentially, you basically get your money back. You die, you're leaving a death benefit, and you have the insurance coverage. That's why I like it. Problem is, you're tying up all that money. Our heirs would make a small profit, about $30,000 in nominal terms. Using life expectancy tables from the Society of Actuaries and the same 3% inflation, that amounts to only $217,000 in today's dollars. So it has a net cost of $187,000, and it's a bit more expensive than the traditional long-term care policy, but without the downside of potential rate increases and the upside of a death benefit. I guess he's talking about that actually anyway. But anyway, you don't have to worry about rate increases. Okay, so let's just keep going. Another way of looking at the economics is provided by Lincoln Financial and the illustrations they quote. Bill Nash noted that using the maximum benefits for 7 years starting at 85 results in a tax-free 7.4% internal rate of return for my wife and 8.1% for me. While I don't think stocks will earn that after taxes, I do believe that return is a far higher probability than using the full benefits. I completely agree. So basically saying, yeah, okay, if you do use it, the likelihood is almost nil. The IRR is 7.4 and 8.1. That's great. But stocks with 7.4 and an 8.1% internal rate of return, much more probable in stocks than it would be for this for sure. If one needs long-term care for an extended period, either type will be beneficial, but I don't find the probability adjusted benefits compelling. I don't either. Buying long-term care has other risks, such as delaying retirement because one has to work longer to pay for the policy, running out of money while not in a home, or even hyperinflation, which over a couple of decades would diminish the real benefits. Healthcare inflation currently far exceeds the CPU. Finally, I've heard stories about fights with insurance companies who have denied coverage. Me too. Anyway, so I spoke to Michael Hurd, one of the authors of the RAND study, who told me one important reason most people don't buy long-term care insurance is that Medicaid provides insurance of last resort. However, I'm told that the quality of Medicaid can vary greatly. Yeah, I tell you, man. Beyond the numbers, let's see here. While, for example, I do not consider whether one would prefer to be at home and how much of a burden would it be for a spouse to have to care for the other. Potential dementia of one party could make it virtually impossible for the other spouse to be the caregiver. I agree. I mean, so if you have a dementia and you got to put them in a nursing home and you have to live in your house, that would be a problem. No other way around that. Carolyn Rosenblatt, who's an author, said not to underestimate the caregiver burnout among family members giving care. Still, she suggested a better plan than buying long-term care insurance is to be active, eat healthy, and maintain a strong social network of friends and families. I agree. Steve Vernon from Stanford suggested discussing long-term care with the entire family, having to plan for such a possibility. There is no good solution for funding long-term care. Vernon pointed out that building home equity could be a possible solution. He also observed even a not-so-good solution is better than no solution at all. Yeah, I agree. So I could not agree more. And I guarantee you're going to have a bunch of comments from long-term care insurance people who say, look at this, look at that. I think I did read these comments. Here we got this guy. Generally a balanced presentation, but how do you self-insure? And having done so, what does the portfolio look like? Okay, I don't get that. You self-insure by not buying the policy, instead of investing in an S&P 500 fund. But if you need care, your heirs will get a lot less money. This can be particularly troublesome for a surviving spouse. Yeah, if you need it and you spend a lot. This is the whole thing. If you need it, yes. If you need it, you wish you had it. The likelihood of you needing it is quite remote. The likelihood of you needing it and spending a significant amount of money is also quite remote. I'm dropping it when I get there. The minute the kids are out of the house, I'm dropping it like a hot potato. And I'm not saying you should not have long-term care. I have it right now. I have it because it's a catastrophic event should I need to go to nursing home. My wife would be doomed financially. I don't think that's the case for most retirees. I just don't. And as such, I'm not going to get it, and I don't recommend it. That doesn't mean don't get it. Just it's not on my high recommendation list at all. Hope you find this helpful. Definitely comment down below. I'd like to hear your thoughts. We'll see you.